Tohana Mahaparishad, CA and tax professionals. We start the lecture with the LMP national anthem.
Please stand up for the national anthem. Lord.
लोकाभिरामम् रणरङ्गधीरम् राजीवनेत्रम् लोकाभिरामम् रणरङ्गधीरम् राजीवनेत्रकरन्तम् श्रीरामचन्द्रम् शरणं प्रपद्ये। श्रीरामचन्द्रम् शरणं प्रपद्ये। श्रीरामचन्द्रम् शरणं प्रपद्ये।
भूषण रामना वंशज लोहाणा ओ अमे रविकुल तणा गौरव सहित जीवन अमारू जीविए रघुवंशना आदर्श पात्रु भाव रे निभाविए पितृभक्ति दे समर्पण थी जीवन शोभाविए।
जीवन
जय रघुवंश, जय महापरिषद, जलाराम बाप्पानी
Once again, welcome to everybody. After the LMP national anthem, would just like to brief you that this session is a joint effort between the Malad Chamber of Tax Consultants and Shri Lohana Mahaparishad, CA and Tax Professionals Body. I would request LMP President Shri Satish Vitlani ji to address the audience.
Hi, good evening, everyone. Can you hear me? Are you able to hear me?
Yes,
Or
the volume is little low. Satish bhai.
Is the volume low? Normally, when I speak, without even microphone, everybody can hear it. Anyway, let me just try once again. I hope that I'm now audible. Are you all right now with this? Is this volume okay or still not
Perfect,
so good?
perfect, Satish bhai.
Now it is okay.
Okay, fantastic. Perfect. Okay. First of all, I would like to thank, Kathy Ben, Bharat Bhai, and the whole team, of Malad Chartered Accountant Association for organizing this event. For the subject matter is really concerning, all the trust. If you ask me, how am I concerned, about this, because I am associated, with many trusts, and all those trusts, are, getting bigger and bigger. I'm associated, with very recently I've been associated with one of the trusts of the Sri Ravi Shankar, that is Art of Living Trust. I'm a trustee, of Khilji Bhagwan Charity Trust, Lohana Mahaparishad Trust, Raghuvanshi Charitable Trust, Gogari Govana Mahajan Trust, again, then, Khilji Bhagwan Charity Trust, and so on, And, as and when, I hear about the changes, all the time, because every time, changes are taking place. And, for the trust, and the trustees, are not really, they would like to take the trusteeship, they would like to, it is very easy, to take the trusteeship, but the baggage and the responsibility comes along, with this is really very huge. I'm sure that all the trustees, I've sent it to many groups, that look, this is something, which we all really need to understand. Because this changes, if we don't understand, the responsibility also, Bharat Bhai, I'm sure that it is really big responsibility, for not complying, with all the provisions, is provided. So, I'm sure that, this is really a wonderful, Kathy. I really appreciate, that the subject which you have chosen is absolutely appropriate. And I congratulate you. And once again, I'm really very grateful. And I really adore, this Malad Association for appointing such a young and dynamic, a lady president, for this association. I've seen, I've been, to your meeting, and I've seen, many stalwarts, in that association. And you are doing good, Kathy. Keep doing good. And please do keep us informed about various provisions, because this is really very helpful. Thank you so much for inviting me and initiating this particular subject. Thank you so much.
Thank you, Satish bhai. I now request CA Bharat Vasani. He is the chairman of LMP CA and Tax Consultant Professional Body to address us. Bharat bhai, you are on mute.
Yeah. Now, okay, Rupal?
Yes, now audible.
Yes. Our dynamic and visionary president, LLP president, Sri Satish Bhai Vitlani. Really, you are great. You are doing very good for our Lohana community. President CA Khyati Vasani, one of the youngest and the first lady president of Malad Chamber. Today's speaker, my very good friend since last 40 years, Natubai Thakrar, CA Natubai Thakrar is an authority of the trust. CA Gunja Thakrar, she is also the authority for the trust audits. So we are very much fortunate. Satish bhai, as you rightly said, this subject is chosen by the Khyati is a perfect one, and it's the right time. I received messages from so many chartered accountants because the message, this program is kept on the first day of the September, where we are on the fag end of the audits of the trust. This is 30th September, we have to file the forms, and 31st October, we have to file the returns for the trust and all. So this is a very important period in which we are keeping the subject of audit for the trust authorities, trust entities. Fortunately, we have with us Satish Bhai, one of the best speaker. I would say they are handling trust audit for so many big trust of the country, Satish Bhai. So we are fortunate Gunja is handling the trust audit issues. Our CA Natubai Thakrar is handling the taxation, taking the taxation issues for the trust. I am not wasting much of the time. Rupal, thank you very much. And over to the CA Khyati or over to Rupal. Thank you.
Thank you, Bharat Bhai. Now I request CA Khyati Vasani, President of MCTC, to say a few words.
Good evening, everyone. Thank you for the kind words, Satish Uncle and Bharat Vasani. On behalf of the Malad Chamber of Tax Consultants, I thank Lohana Mahaparishad, especially President Shri Satish Vitlani and LMP and CA Consultant Chairman Dr. Bharat Vasani for agreeing to join us in this initiative of helping our fellow tax practitioners who are facing a lot of issues when it comes to multiple compliances that have been introduced for the trust this year. So thank you for appreciating and thank you for also encouraging and motivating. Satish uncle is like कि આ બધા તમારા CA માં મને કેમ તમે બોલાવો છો? મેં કીધું તમે અમને બોલાવો છો, અમે નથી બોલાવતા તમને. We all are really thankful to our chairman of the lecture today, CA Natwar Thakrar, who's a pioneer, who's a stalwart of the trust. He does audits for a long period of time for a really renowned trust of the country. And CA Gunja Thakrar, who's the speaker of the day, you will see how soft spoken, how clear she is when she explains everything. We are in for a treat today. They're going to help us to decode this complicated amendments that have been introduced. The new tax audit reports for trust are incredibly scary for us tax professionals, and I'm certain that after this lecture we're all going to be trusting ourselves for doing this trust audits. And before I end my address, I have a few announcements on behalf of the MCTC and my committee. We have a lecture on the 8th of September, which is a webinar on opportunities for tax professionals abroad. It is a series, and this particular lecture is for tax professionals who are looking for opportunities in Dubai. The speaker is joining us from Dubai, CA Ronak Parekh. And the second announcement is we are in process of increasing our membership fees, life membership fees for MCTC. It is currently 2,500 till the 30th of September, and we are going to increase it to 5,000 from the 1st of October. So anybody who would like to become a member, please make sure that you do it before the 30th of September. Thank you. Over to Rupal.
Thank you, Khyati, very much. Now I would request LMP Youth Chairman Chintan Vasani to address us, because they are also doing very good initiatives for the youth of LMP and in general. Thank you.
Thank you, Rupal. Very good evening to each and everyone who are attending here. Respected President of both esteemed association, our today's speaker, and chairman of the CA and professional group, and each and every member who is attending today. A very good evening to each one of you. And as LMP, we are super proud that we have so many chartered accountants and so many good associations like MCTC associated with us. Last month, I got a chance to attend an exhibition, an event by Entrepreneur Magazine, which had all the sharks, including CA Aman Gupta from both Shadi.com founder Anupam Mittal, Amit Jain, and around 450 startups. And one thing which I was going through, Hasid, I remember discussing this with you. मैंने एक चीज नोटिस किया, हमें एक वस्तु नोटिस करी कि all the big founders, all the big companies, they either have a chartered accountant who is running the show or in the top level management. So CAs are play a very big role. Of course, in Lohana Mahaparishad, the CA group is super active. And today with this also, I want to also say, with permission of Satish Bhai, that in January, in the first, in January, we will be having LIBF in India this year. And this is going to be an extravagant event, very well planned. We had our first event at Uganda, which was attended by over 900 delegates from more than 30 countries. It was an amazing event attended by the president of Uganda. And this year we are having it in India. And we are from last few months, our association, our people who belong to the business development committee, our president, we have been trying to make this event a success. And today, especially to all the chartered accountants, like, I see Satish Bhai, at least people who are representing more than 25,000 clients. So, we have 20,000, 25,000 plus people who would be interested. So anyone who think, they can add value, they can always get in touch with Khyati, they can get in touch with Hasid, Gunja, you can always get in touch, and let's come together and make a grand show. I would request Vaibhav Bhai from Lohana Mahaparishad to please play a 15-second video that we want to show today. And then I would request Rupal to please, take it ahead. Thank you so much. So yes, it's gonna be it's gonna be better and it's gonna be bolder. And this year we are expecting a lot of delegates from more than 40 plus countries. It's gonna be an extravagant event. Anyone who is into business, anyone who thinks their clients can add value, we would love to have a meeting with them. Thank you so much.
Thank you, Chintan, for the brief introduction of LMP Youth Committee.
Can I give me half a minute? Can I
to introduce our chairman for today, Mr. Natwar Thakran.
Just one sec, Rupal Ben.
Yes,
Natwar uncle, just one sec. Satish uncle wants to say something. Yes, Satish bhai.
A minute, I would like to take, this particular event is not only for the businesses. This event also is, for the professionals. As you all aware that we are a global community, and chartered accountant practicing here in India, is maybe somebody is doing business in UK or overseas, anywhere in the world, they require your services. Likewise, other chartered accountant, maybe you require the services of chartered engineers, advocates, and so on. So this particular event is also for the professional startups, and you name it, and this is going to be a huge event. This is exclusively an exhibition, and last time it was a seminar and so many other things. But this is an exclusive exhibition, where you can show your products and services. So this is for goods and services both. So please make sure that you are able to come out and just tell people the services you can offer. Thank you so much for giving me this time. Thank you once again.
Thank you, Satish bhai. Over to Hasid bhai for introduction of Natwar Thakran.
While we all know our beloved Natwar uncle, and Natwar uncle needs no introduction because he is a part of Lohana as well as Malad Chamber since a very long time. And when it comes to trust, Natwar uncle is somebody whom we look forward to, because he is not only auditors to some of the India's largest trusts, but he is also trustees in many trusts. So he is on both the side of the table, but just from a For the people who are new, Mr. Natwar Thakrar is a practicing chartered accountant with a specialization in FEMA and international tax. He was a chairman of International Taxation Committee of Chamber of Tax Consultants for 2 years, and presently is a member of International Taxation Committee of Chamber of Tax Consultant BCAS as well as WIRC of ICAI. And he regularly contributes to articles of CTC's journal, which is known as the Chamber Journal, when it comes to FEMA related updates and the matters related to FEMA. He has co-authored several publications on international taxation. Some of them are compilation of 140 plus articles of experts by CTC. MCTC is a very old publication on FEMA and non-resident taxation. He was a co-authored referencer on FEMA by ICAI, and publications of CTC on practical aspects of remittance certificate under Section 195 and many more. So the list goes on and on. In the interest of time, I would like to go ahead and introduce and ask Rupal to introduce the next speaker.
Thank you, Asif Bhai. Now I request CA Kavit Gadia to introduce CA Gunja Thakrar. Kavit Bhai? Yes, please unmute.
Thank you, Rupal. Now I would like to introduce and invite our today's lecture speaker, CA Gunja Thakrar. She is a member of Institute of Chartered Accountants of India, a commerce graduate from Mitibai College, Bachelor of Law from Mumbai University. She is also a qualified company secretary from the Institute of Company Secretaries of India. She has also completed IFRS and Ind AS certified course from ICAI. A professional with almost 10 years of experience, which includes research on various issues arising in Ind AS conversions and other GAPs for listed companies. She interacts with a wide array of clients for giving insights of Ind AS adoption and implementation processes. And she was predominantly involved in statutory audits, tax audits, due diligence assignments, valuation assignments, and internal audit assignments. Right now, she is currently working with NG Thakrar and Company Chartered Accountant firm as a director in audit and assurance department, and handles the assurance services relating to charitable trust and not-for-profit organizations. She is also a co-opted member on various committees over the years of Bombay Chartered Accountant Associations, Chamber of Tax Consultant, and many more. She is co-author of many articles and publications relating to startups, MSMEs, IFRS, Ind AS, etc. Now, I do not want to waste our time and hand over so we can learn more from both the stalwarts.
Thank you, Kavit Bhai. The presentation will be taken up by Gunja Thakrar with Natu Bhai giving his inputs as and when required. Over to you, Gunja.
We will also like to request that all the question answers will be taken at the end of the session after Sir has made his remarks.
Right.
You can also put in the queries in the chat box so that we can take them one by one at the end. Thank you.
I'll request Natwar Bhai Thakrar to give the opening remarks and then I can take over. Thank you.
Thank you, Gunja. Thank you, Satish Bhai, Bharat Bhai, Khyati, and all our organizers for giving me this opportunity to be amongst you. Today's session really belongs to Gunja. She has put in very hard work, and my role is here to just be present and encourage Gunja. She's as rightly mentioned, she is a very excellent speaker, and she is specializing in the issues relating to charitable trust. So since this is a very long presentation, I will straight away request Gunja to start with the presentation, and whatever that I have to say, I will do at the end of the session. So over to Gunja, please.
Sure. Thank you. Respected Shri Satish Bhai Vitlani, President, Lohana Mahaparishad, Dr. Bharat Bhai Vasani, Chairman, LMP, CA and tax professionals, CA Khyati Vasani, President MCTC, Shri Jitendra Fulia and CA Rima Shah, conveyors for today's session, CA Natwa Thakrar, Chairman of the session, all the past presidents, and my dear friends, a very good evening, one and all. So I'll just share my screen. I hope this is visible.
Yes, we can see.
So I would like to thank Lohana Mahaparishad and Malad Chamber for considering me and giving me this opportunity, especially Khyati for considering me and inviting me. So it's basically my learning experience. So I could get a time to read clause by clause. So thanks to you. As you are aware, this form has already created a lot of jitters amongst all the tax professionals, the trust managements, and so let's start taking clause by clause. So this is the content of the presentation. First, I'll take the applicability of whom these trust audit is mandatory for. Then we'll go clause by clause. We'll analyze the new tax audit report from 10B as well as 10BB. Plus, I've just tried to have a comparison for which is for 10B and which is for 10BB, clause by clause. And the most important for today's session, which is even more important than the new form, is basically 17AA. So this is the new rule which came for maintaining the books of accounts. Up till now, there was no prescribed books of accounts or no methodology given to any trust. But this rule came on 10th of August, and it is mandatory to do from AY 23-24 itself. So we'll go over this in detail, and then we can have a question answers round. So CBDT via notification dated 21st of February has introduced this new revised form, and it is basically for any trust which is exceeding the total income of 2.5 lakhs. That is the maximum amount which is not chargeable to tax. So any trust which is earning more than 2.5 lakhs will fall under this tax audit. And they have to maintain their books of accounts as per 17AA for both as per 1023C as well as 12A. Under any of the regimes, they have to maintain the 17AA. And the accounts of the trust are to be audited, and the report has to be furnished in the prescribed form of 10B or 10BB. So we'll discuss this form. So basically, many trusts will be covered when we talk about 2.5 lakh. So this new auditing requirement casts a much larger obligation on the auditor, who is now required to report on the objects, operations of the institute, including detailed reporting on contributions, application of income, taxability, capital asset transfers, transaction with the specified persons, and many other violations, etc. It is understood that these amendments will create a lot of difficulties and doubts for the organizations for undertaking reporting in this revised format. So if a trust wants to just close down or they want to not renew, they don't even have that option. Otherwise, they will have to pay exit tax, which is newly introduced, and you have to pay tax on the accredited income. So it's not easy to leave this. We have to, learn these amendments and follow it. So the new rules have come into effect on 1st April. We'll first go to the audit report. So the audit report in form 10B and 10BB consist of two parts. First is the audit report, and the second is the annexure. So basically, the audit report is same for 10B as well as 10BB, but the annexures are quite different. Here, the auditor has to certify the balance sheet, income and expenditure account, profit and loss account, which are in agreement with the books of accounts as per 17AA, whereas the auditors have to certify the particulars of the annexure are true and correct. So this is the most crucial part, wherein an auditor who is generally only giving a true and fair view, this time he has to certify as true and correct. So the annexures are basically all the factual details. So for us to sit and verify each and every information provided by the trust is whether true and correct. It's a big and very tedious task. Here, the auditor has an option to state the observations or qualifications. So basically, this is the only place and a place below wherein if the auditor is not comfortable stating if there is some points where he wants comfort on, he can subject his report through a qualification or he can put as an observation. So if we have a list of trustees which fall under specified person, and if you feel okay, you are completely relying on the management, we should make sure that we qualify or put it as an observation as the case may be. The next point is the auditor has to give an opinion about true and fair view for the balance sheet, income and expenditure account, or profit and loss account, and of the income and application. So basically the point of income and application was never in the past. So here, to justify whether the trust has actually applied their income, we have to verify and go through that in detail. Or profit or loss of the relevant accounting year. This also can be subject to observation or qualifications. Where any matter stated above, like by chance, if you are putting some qualification, it is mandatory to give a negative mark, or you have to state the reasons why you are mentioning that, and you have to give reasons there at this point. So going clause by clause, there are 49 clauses in 10B with 28 schedules, and in 10BB, there are 32 clauses with 6 schedules. So basically applicability. So when does you have to fall 10B or 10BB, that we will understand. So if a trust, whenever it is registered under 1023C or 12AB, if the total income without giving effect to the provisions of the relevant section exceeds above 5 crores, they mandatorily fall under the bigger form, that is 10B. Or if they receive foreign contribution, or if they have applied any income outside India. So here it is important to note that no threshold limit is prescribed for receipt of foreign contribution. So even though if you have received 1 rupee, you go automatically to form 10B. And even if you have applied a nominal amount, you fall under outside India, then you fall under 10B. And in any other cases, you have to go with 10BB. So 10BB is basically a smaller form, and all the smaller trusts will have a easier compliance compared to 10B. So I'll go through the basic details in a bit fast manner, and wherever we have to discuss, I'll slow down. So this is the basic details. I'll directly go to point 6, that is other addresses. So as per 17AA, here you have to maintain your books of accounts only at your registered office. So if a trust has their books of accounts apart from their registered office, they have to mention it here, as well as under clause 14, which we'll take it in the coming slide. But we have to intimate that to the assessing officer in writing within the 7 days when the resolution of the management is passed. So by chance today your management has decided that you have kept the books of accounts other than registered office, you have to pass a resolution, intimate the assessing officer, and notify it as other address. So this is a very crucial point because we have to report this as on 31st March, whether the books were at the registered office or any other place. So this is to be kept in mind. This is the basic details of whether it's a trust and they have a trust deed. So this is also basic details. Basically, we have to plug in the registration details. Here, a point to note is that we have to select the code and provide whether we have a regular registration or a provisional registration. And we don't need to provide information of provisional registration if we already have a regular registration. So when we select this code, we also have to intimate our 12A registration, if we have our ATG registration, if we have any other registration like 35(1) or ATG, etc. All the information which we have to file under income tax, we have a registration, we have to inform them. So this is the information of management. Here you have to plug in the details of all the author, founder, settler, trustee, members. And we have to select the relation. If they have shares, we have to note down their percentage. We have to select codes. and then we have to put their address, and if there is any change in the relation, we have to intimate that. So basically, they have also decided and given options of which codes you have to select. If you are giving a trustee information, you have to select 4. If you are giving office bearers information, please select 9. Then we have to also give information about their codes of their information of PAN and Aadhaar. So if you provide a PAN card as information, we have to select 1. So moving on. So this is objects of the auditee. So we have to select the code. If a trust is registered under 12A as education or relief of poverty, he can select 1 or more as the object, and he have to select that code 4 or 5. This is the information of object. By chance, if a trust has modified their object, it only gets applicable in that case. In any other case, it will be not be applicable, and you don't have to fill in the other details. So this is also relevant to that. Commencement of the activities. So basically here you have to plug in the details when you have commenced your activities. This is generally concerning for provisional approvals and you have already started your activities. You have to mention the details here for that. So we already discussed in point 6. I am just taking it again in detail. So here we have to mention whether the books of accounts have been kept in the form and manner as specified under 17AA. Then we have to, we'll take down in note number E what books they are mentioning. Then we have to select whether it's a computer-based system or it is a non-computer-based system. And if we have any other address, when did we decide for keeping that address? And whether we have intimated the assessing officer for that, and whether the books are audited or not. So it is majorly in many trusts that we might have places other than registered office, because the trusts are 50 years or 100 years old and they might have registered office like in Gujarat or in some other place, but currently they have a staff and everything somewhere else. So this is very important to notify the new addresses, and we can give more than one address. So these are the books. It is cash book, ledger, journal entries, copies of bills, whether machine numbered or serially numbered, original bills, whether issued to the person, and receipts in respect of payments made by the person. Any other book that may be required. So this 6 point, we only have to decide which will give us a true and fair view. And we have to mention those points also here. Books of accounts as referred in 1 to 6 above for business undertaking. So if we fall under 11.4 of business undertaking, we have to keep all these books separately for that business undertaking. The books of account as referred in 1 to 6 for business carried on the assessee other than business undertaking. So if they have any other books of account, they have to mention here. Record of all projects, institutions run by the person containing details of their name, address, objectives. So all these details we have to keep for 10 years. So to collate and maintain all these information is a big task. So we have to keep the management appraised about all these requirements, and one should really make sure each and every book is maintained in the sequence they have asked. So basically, all of the 18 codes, only the first 3 codes are basically for books of accounts, and all the below codes are more information. They are asking us to keep record of income of the person during the previous year as per the rule 17AA1D2. So basically, they want us to give information about all the specified persons, and their information also we have to give them. Record of application of income out of income during the previous rule. Record of application of income out of income of any previous year preceding the current year. Record of voluntary contribution with specific direction or which are forming part of a corpus. Record of contribution received for the purpose of renovation or repair of temple, mosque, which falls under ATG of the 2B section. Record of loan and borrowing, that also we have to keep in detail. Record of the property as per rule 17AA. So here they want us to keep information of all the properties for 10 years with all the information of the stamp duty paid, where is it located, and to have all the information handy at the registered office. Record of the specified person and any other documents containing any relevant information. So here they are given an open option that you have to plug in all the information which is relevant so that your books of accounts are updated. So the auditor has to provide separate code number for separate types of document, and to provide these type of information is very difficult, and the auditor has to report whether it is maintained properly. In case if accounts and documents are maintained at other place, we have to intimate that, and to comply with this requirement, it is advised to pass this resolution at the earliest. And most important thing is the impact of not keeping and maintaining books of accounts and other documents in prescribed form and manner as specified here will apply as a result and trust. Like if it is not following, they might lose their registration, because it's clearly specified on the first point we discussed under 12A 1B that if it is not maintained as per 17AA, you have to you might not get your exemption. However, as per Finance Act 2023, there is a benefit given under section 1310 for computation of income. So by chance we lose our exemption or we have to pay tax, there are certain expenses which are allowed while computing the tax. So this is the comparison which I was talking. This is basically 10B and 10BB. Here, there are certain points in the 10BB which is not required, like registration details are not asked, object is not asked. Okay, so moving on, we are into most difficult, or I must say highlighting point of advancement of general public utility, where in any of the projects or institutions run by the auditee, one of the charitable purposes, if it is advancement, we have to select a yes or no. And if we are getting covered into this, then we have to check 215 proviso, wherein I'll just take you to that proviso. So 215 says that provided that the advancement of any other object of general public utility, GPO charity, shall not be a charity if it's not a charitable purpose, if it involves carrying on of any activity in the nature of trade, commerce, or business, or any activity of rendering any service in relation to any trade, commerce, or business for a cess or fee or any other consideration, irrespective of the nature of use or application. So there is a shift in the law. Earlier, it was not necessary that you earn something in a by way of donation. If it is just application, if you are done for the object, it was fine. But here now, after the new Supreme Court judgment under Ahmedabad Urban Development Authority, if you are earning your income with any general public utility, if by any business you are earning income and you are spending that for application, it is not allowed. You have to earn your income basically with objects of the trust. So I'll request Natubai, if you can have a gist on this point, or you can give your thoughts.
Yeah,
on this
Gunja.
point.
So this advancement of any other object of general public utility was a subject matter of a very long drawn dispute. And recently, Supreme Court of India has dealt with that issue in the judgment of Ahmedabad Urban Development Authority. So if one looks at the objects of the trust, which are provided under section 215, and as Gunja mentioned, there are various objects like relief of poor, education, yoga, medical relief, preservation of environment and forest, wildlife. Now they've included yoga, then places of artistic or historic interest. So these are specific objects. Now, apart from that, the last object that is referred to is advancement of any other object of general public utility. So objects whose names are specifically mentioned in 215 are known as per se objects. That is what the Supreme Court has referred to in ODA's judgment. And if you are not undertaking per se object, so suppose you are not doing activity which can be justified as a relief of poverty, or it cannot be justified as educational activity, or for that reason any of the specific objects, then it will fall in the category of the last object, that is called advancement of any of the object of general public utility. And this largely applies to the our community associations, or especially more than the community, it would apply to trade associations, where they are not for relief of poverty or education or yoga, but they might be representing to a particular group of people for advancement of certain trade or for certain other motive. If you fall in that category, what has been held that if you undertake any business activity, the contribution of that business activity should not exceed 20% of its total receipts. That is one condition. And the second condition is that the whatever business that you are undertaking should be in pursuance of that object. So you can't be doing any other business. So let's take an example of a particular business association. So whatever the activities they conduct, and when they charge fees, so what they're saying that you charge fees, that is fine, but if you make a profit and the contribution of that fees is more than the profit of that fees is more than 20% as compared to the other receipts, then the activity of the carrying on of a business will not be considered as a charitable activity, and to that extent you will lose the exemption. That is the objective of this advancement. I will reserve some of my comments at the end. Now, Gunja, you can continue with your presentation.
Thank you, sir. So once we fall into the point A, then we have to consider how much percentage it is compared to our total receipts, whether such activity fall under trade, commerce, or business. Here, the auditor has to check whether during the year such activity was actually carried on by the auditee or no. So because it is on us to verify yes or no. So it's mandatory for us to go and have a check on that. Whether there is any activity of rendering any service in relation to trade, commerce, or business. If yes, we have to mention the percentage. Whether such activity of rendering service is undertaken, here also we have to check whether such service was actually carried on. The next point here, we have to mention which projects or institute fall under the advancement of general public utility. The whole information of annual receipts, activities undertaken, where we mentioned above, we have to report everything here. The next clause is business undertaking. Whether the auditee has any business undertaking referred under 11(4) of the Act. Here we have to identify whether there is any business undertaking, whether the property of the trust is utilized for running any business undertaking, whether the property held under the trust is exploited for some reason to carry out any business undertaking. We have to identify that nature. And there are a list of codes which is given in the form. You have to mention that code. The most important point is if we have such a business undertaking, we identify that it is a business undertaking, then we have to maintain separate books of accounts. And that information we have to plug in whether such books of accounts are maintained or not. The income from such business undertaking for the previous year, which is not included, we have to take that income over here. And the income from the business undertaking for the previous year, which is included in the total income, that we have to mention. So basically, we have to identify whether the business held under the trust mentioned under section 11(4)(a) versus the business incidental to attainment of the objects of the trust. It is mentioned under section 11(4)(a). So here we have to identify whether a business undertaking is incidental or it is directly a business. And if the business undertaking trust crosses the prescribed limit of tax audit, then we have to also file tax audit report under 3CA and 3CB. So that's a very big task. We have to have a whole new tax audit report. Apart from this new tax audit report of 10B, we have to also file 3CD. The e-filing utility to provide upload facility for business undertaking is showing. So if we go to the e-filing currently, there is an option to select 3CA and 3CB. So the next point is whether the auditee has any income, being profit or gain from any business as referred under 11(4)A or 1023C of the 7th provision. So when we take an example, if we are running our hospital and I have a pharmacy, so it is basically an business incidental to my object. I have to use that pharmacy for the patients inside. So it can fall under business incidental to the objects. I have to select this business code for it. I have to keep my separate books of account for that pharmacy. And if required, I might also have to file tax audit report for that. So this is the very important point, that if we have this pharmacy, then we also have to file tax audit report. And also the profit and gain from such business during the previous year. So note F is similar, that we have to upload balance sheet, profit and loss account, audit report in form 3CA or 3CB as applicable for the business undertaking or business incidental to objects. So basically 4A just specified that it shall not apply to any income or trust being profit or gain of business unless it is incidental. So we have to identify whether that actually is an incidental or no. So this is the information for TDS on receipts. So only 4 of the sections are mentioned in this clause and not any other. So it is basically 194C, H, J, and Q. So by chance, if we have a TDS deducted in any of these sections, then we have to give information like name of the deductor, their TAN number, amount, the amount of tax deducted at source, the section under which it is deducted, and the category of income or receipt. So basically, if we see these 4 sections can fall under trade, commerce, or business. Maybe it could be a contract, or it could be a professional fees, or it could be a brokerage or purchase of good. So they want to identify whether this trust, if they do not select any other point of business undertaking ahead, or if they do not select any other thing in business incidental, they might automatically, they might have to plug in the information here because their tax might be deducted on this point. Here you have to also mention the activity which they are rendering for such service, and you have to identify the income which is the business earned for this object. And if you have any of these tax deducted, it is essential to have separate books of accounts. So by chance, if you start filing the form and we have identified that we are getting deducted in any of these 4 tax deducted at source, we have to make the auditee understand that he has to maintain separate books of accounts and they have to plug in the information accordingly. So this is clause 20. Here it says that whether the provision of 22nd proviso to 23C of section 10 or subsection 10 of section 13 are applicable. So basically it's just a one-liner question. You have to answer a yes or a no. So I'll just give you an idea what this clause says. So I have to select a yes or no if I default under any of the 4 specified situations mentioned here, like we are under 215, we violated any of the conditions of keeping books of accounts, we are not getting accounts audited and not furnishing as per the due date, and we defaulted in filing ITR. So if by chance I have any of these cases, I am allowed to have such deductions of expenses other than capital expenses. So it's a beneficial provision, like if you are falling under violation of these clauses, you will be allowed. So here, most of the cases, it will be no only, because if I'm doing a non-violation, then only this clause will be applicable to me. Okay, so basically the situation, the income is to be computed by allowing deductions for expenses other than capital expenditure incurred for objects, and not allowing expenditure out of corpus or out of loan or borrowing, or non-allowable depreciation and expenditure in the form of donation to any person, and disallowances on account of default under 10A14 or cash expenses. So basically, by chance, if I have a yes here, then these expenses will be allowed to me. The income so computed shall be chargeable to tax as income of an AOP. Moving on. Here, if you see, I think all the trust who are under 10 BB, it's a big victory for them, because none of these points are applicable to 10 BB. So it's only for the bigger company or a bigger trust who has 10B, they have to have all these points. Then we go to clause 21, 22, and 23 of voluntary contribution. So as you are aware from last year, all the trusts are mandatorily required to now file the form of 10 BD. It just came last year. The due date for filing this form is 31st May. So basically this situation or this amendment came from last year, so that the person giving donation gets an automatically deduction while they file their return. So by chance, I'm giving a donation to any trust. So I don't have to really plug in an ATG. I'll get an automatic information because the trust has filed the form 10BD. So there were cases in the past that if there is any tax, they would, directly show something under ATG and they could save tax. So from last year, this is not allowed. The first question is whether auditee has filed form 10BD for the previous year. We have to select a yes or no. We have to mention the total sum of donations reported in form 10BD furnished by the auditee, the amount we have to mention here. Donations not reported in form 10BD or not required to fill in the form 10B. So here may be the case you might have forgotten to plug in the 10BD, or if you have a FCRA donation and if you see the utility of form 10BD, it does not take it unless you have a PAN number. So for the FCRA donation, you don't have a PAN number, so you can plug in those information over here. The next point is donation received by any fund or trust or institution of the auditee which is approved under the ATG. So basically, it's all the donations for renovations or repairs of any such temple, mosque, gurudwara. You have to mention it here. And the donations received under the clause 4 is like any other fund or any institution will fall under here, but you have to follow some criteria for taking the deduction over here. Here you have to mention the information for cash donation exceeding 2,000, all the information for donation received from other charitable institutions and others. So here they are asking us to mention if we by chance have not selected any other point and we have some donation, we have to plug in here. Donation which could not be reported in 10BD due to non-availability, here we can select if we don't have the PAN number or any other information, or we don't have the name, we can put here. Donation received in kind. So this is also a new change that the donation in kind has to be computed in monetary value. So you have to identify or get it valued by a valuer, or you can take management's representation on this monetary value, and you have to insert the amount over here. The next point is the auditee has to basically provide the details of anonymous donations for taxable as well as non-taxable donations. So in here, basically, there are two categories. So if you are a registered trust under religious, So you anyways are allowed to have anonymous donations. So you do not fall under taxable donations. So you have to select that and you can go in a non-taxable. And by chance, if you have crossed the limit specified under the section, then you fall under the taxable. So I'll just take you, and if you are taxable, you have to be taxed at 30%. So the limit here is basically 1 lakh or 5% of the total received of the donations received during the year, higher of the any of the two. If it is exceeding that, then you may have to pay tax on that. All the informations you have to plug in here accordingly. And the total donation not reported will be auto-calculated based on the formula above. Then we will have total voluntary contributions received by the auditee. So here they have given you an exhaustive list, like basically all the informations you might have already plugged in 10BD. If not, then they are giving you an option which is not reported in 10BD. Then you are also asked anonymous donation. So you will have an amount on the above calculated manner. You will have a total voluntary contributions calculated. So during the year, if you received 100, then based on that 100, you have to apply that income in the coming form. Then you are asked what is the total foreign contribution out of the total voluntary contribution stated above. And then we have a schedule FC, wherein we have to furnish all the information of foreign contribution there. The next point is, as we are already reporting corpus information in 10BD, we have to just give information about the details of the corpus donation and the corpus schedule. Then we will have total voluntary contribution required to be applied. So here we will have all the informations of total income received during the year. Then we have to find out how we are going to apply and which object we are using to apply that income. So here we have to identify income to be applied. So here in point 28, they are saying income other than voluntary contribution derived from property held under the trust. So basically, I already mentioned you all the information you might have plugged in your 10BD and other various points. This can be a case where you have interest income, which is not reported as it does not fall under voluntary contribution, and the interest income or any other rent income the trust is earning in the clause 28, you have to plug in here. So your total income will be applied in that manner. Clause 29 says income applied outside India, which is eligible. So here also they have given a schedule, and you have to plug in the information which is allowed, that you have taken a permission to apply outside India. Then you can fill in this detail. Clause 30 is the income required to be applied in India by the auditee during the year. So if your clause 30 says 100, you have to use this 100 rupees as per your objects. And if you're not able to use, then you have to file the necessary forms mentioned and you have to use it in the coming year. So let us go to the most important clause, that is clause 31. So this is a summary of 10B and 10BB. So we are, so it's basically, it is in both the places, these clauses are covered. So clause 31 is application of income. Here, application of income is excluding the application not eligible and reported under serial number 37. So 37, we will take it in the coming clause. It's basically the application for last year, which you have not used. And 31 is basically the application of current year. Total income applied for charitable or religious purposes in India during the previous year. So a big task which they asked us to do is that we have to identify electronic and non-electronic mode. And luckily, CBDT came with a circular on 24th of May that account paid checks are allowed as electronic. Earlier, they were not allowed. So all the income like RTGS, NEFT, we have to put in electronic. Another year, if it is any cash or anything, we have to plug in here. And this comparison, the auditee has to be ready with the breakup of this, as well as whether the application is for revenue or capital. So while informing the auditee, we have to ask them to make it in a category of electronic other than not electronic, as well as revenue expenditure and capital expenditure. The first point is contribution or donation to any other person during the previous year. And we have to select here which object. So by chance, you are under education, and out of that 170 you are using as education, you have to select 70. If it's electronic, you have to plug in here. And if you do not fall under any of these objects, you can select application which cannot be specifically categorized above, and you can put like some category of admin expense. By chance you are not able to directly link to your object, you can show here, because showing in advancement will have other complications. So it is ideal to show it here. So the details of applications where we select the above, it is also necessary to identify that if you have done payment to any person which is excluding 50 lakhs. So this will highlight that why during the previous year a trust had to pay someone more than 50 lakhs. So the information, if it's a bigger trust, they could have some salary, or if they are making a new building, it could be a contractor which they have to make payment. So here you have to plug in the information, the name of the person, whether it is paid or credited, PAN of such person, amount of application, mode of application, whether it's electronic or other than electronic, and whether TDS has been deducted. So this we have to identify, and we have to select a yes or no, and which section it has been deducted. So by chance, if we have not deducted and it is exceeding 50 lakhs, we go under the disallowance, which is asked ahead. Amount which was not actually paid during the previous year, and if it is included in 1C above. So if you have just credited and not paid, then you have to mention it here. Amount actually paid during the previous year, which is accrued during any earlier previous year but not claimed. So basically, from last year, if you recollect, all the tax payments which is actually paid, only those are allowed as deduction, and which are provided for, it is not allowed unless you actually pay. So they will be allowed, but in the next year when you actually pay. So here you have to give, like by chance last year you provided for, but you paid this year. So those last year's allowable deduction you can mention here. And then we come under the total amount to be allowed as application. So it is also auto calculated, and you will have an amount which you have to actually apply. That's the amount. As we also already mentioned, we have to give a bifurcation of revenue or capital. Amount invested or deposited back in corpus, which was applied during any preceding previous year and not claimed as application. So here we have to plug in the schedule corpus. So as per the recent amendment, the deduction of corpus and loans and borrowings are now allowed when you actually repay it back or you repay the loan. During that year only it is allowed. So here you have to mention that. The next point is repayment of loan or borrowing, which I discussed. Then comes, and we have to fill in the schedule for loans and borrowing. Amount to be disallowed from application. So here there are the clause which basically says the tax has not been deducted, or after deduction has not been paid on or before the due date specified in the subsection 139(1). So then we have to file the TDS disallowable, and we have to put in the information, and this will not be allowed as my application. The next point for disallowance is payment other than account pay check exceeding 10,000 rupees. As we are aware of the section 40A, 3 and 3A, we are not allowed to have account pay checks like other than account pay check, which is more than 10,000. Donation to any other fund or institute or university or medical institute referred in 11 or 12 of the Act towards corpus. So whenever you give a corpus donation, it is not allowed as a deduction, because as such also corpus is you are not paying tax on it. So when you are giving it, you will not get the benefit for that. Donation to any other fund or educational institute or trust referred in 11 or 10 not having the same object. So it is important to note that in clause 12, as an auditor, it is our duty to check with the auditee that whether they have donated, whomever they have donated, whether they have checked their ATG, their 12A, whether we have taken their trust deed, and have we checked whether the trust which they are giving are of the same object? Because I am running a hospital and I do payment for education institute. So how do I identify until I have all these documents handy with me? So it is my documentation and it is my duty to have these set of accounts ready with me. So these are also other, like if donation is given to any other person which is not allowed as per section 10 or 11, 12, you have to mention here. Application outside India for which approval is not given under 11.1, you have to mention that. Application outside India for which approval is given, here you have to mention which approval you have allowed, and that is also it's mentioned under I think disallowance. Here we have to check how the utility is working. Even though I have approval, still I have to mention here. So this is a point we have to discuss and look how does it work on. The next point is applied for any purpose beyond the objects of the auditee. Here it is my duty to verify whether the amount paid applied is for the objects of the trust or not. So it's a big task for us to actually check whether the auditee is using any objects or its application is going beyond the objects. So it's a documentation on our end. And as much as possible, we should try to take management representations later, or we have to get our comfort, or at least we should have discussion with management where they give us all the information to which we can rely. Here, any other disallowance they are asking us, then they are requesting us, please specify. So here we have to upfront tell them, by chance if it is not covered anywhere above, you have to mention here. So this is a point where they have given a future way that if something is not given above and something comes under, because it's a new form and it could be something missed out. So here we have to put it here in the clause 15 here. So the next is total allowable application. So earlier all the application or the income which I received during the year, which is for my objects, reduced by the disallowances, I'll get a net amount which I have to apply. Once I get my total allowable application, I have to also mention the amount deemed to be have applied. So here, as I think everyone must be aware of the form 9A and 10. So if you are going to use the amount in the next year, you have to file the form 9A. And if you want to use it for more than, like you have to accumulate for 5 years, then you have to file the form 10. So for this year, we have a circular number 6. So it's a clarification regarding provisions relating to the trust. So it is clarified that the form 10 and 9A is required to be ideally furnished 2 months prior to the due date of furnishing the return of income. However, as there were lots of representations, they have mentioned that such accumulation or deemed application shall not be denied to a trust as long as the statement of such application is furnished on or before the due date, that is 31st October. So ideally, it should be completed by yesterday, that is 2 months prior. By 31st October, we have to file this form, but this clarification gives a leeway that till 31st October, we can file this. So then once we have the information here, we have to refer the schedule and we have to put the information of deemed income and also for the accumulation. And then we will have income accumulated or set apart for application to the extent it does not exceed 15%. So this will also to be calculated, and we have to plug in the information which is exceeding the 15%. The next clause is for taxable income. So the income taxable under section 115 BBI, it is taxed at 30% plus surcharge as applicable. So if you fall under any of these categories, you will be taxed under the 30% rate. So by chance, if you default in utilizing the amount which you have, filled in the form 9 and you treat it as a deemed application, but you could not use it, you might have to pay tax on that. Deemed income in explanation 4, that is, if the default in utilization of a period of 5 years where you filled the form 10 and you could not use that, you have to fill this accumulation form. Accumulated income applied other than charitable or religious purpose or ceases to be accumulated, you have to say a yes or no over here, and you have to mention the amount as well. And as you know, during recent years, it also got amended that if you have any investment, it has to be only be under the modes of 11.5. So this was already there, but the tagging of corpus with 11.5 came. So it is important for us to identify how many modes of investment are there and whether each and every corpus is tagged, specified donations we receive, that is tagged, and all the FDs are tagged accordingly, and whether it is invested as per the modes. Income accumulated and not utilized for the purpose, it is accumulated. So by chance you accumulated and you stated the reason that I will make a building and this fund it is used for renovation, but the actual accumulation you used for any other purpose, then you have to select here and put the amount. The next is accumulated income credited or paid to any other registered trust. So here you have to select a yes or no, and also have to inform about the income which you have actually credited or paid to other registered trust. Here I would like to state that in the recent amendment, it also came if a trust gives donation to another trust, only 85% of such donations will be allowed as application. So this year we don't have to do it. This application comes from 1st April, but we have to keep in mind because the projects the auditee might be having could be an ongoing project. So they have to make sure if they're not actually utilizing the funds on their own, then they will have a reduced accumulation, or they might not get a full application of such donation given to other trusts. The next point is income not to be excluded from the total income under the 22nd proviso. So basically income used or applied directly or indirectly for the benefit of the specified person. There are many clauses for the specified person. So we'll go that in detail, who comes under specified person. And also there is a benefit given under the Finance Act 22 with effect from 23-24 that only that limited part will be taxed and not the whole income will be taxed. So by chance there is 100 as a income, and if the specified person has benefit 30, then only that 30 rupees will be taxed at 30% and not the whole 100. So this is a beneficial provision. Then we come under clause 33. Section 115 BBI and the anonymous donation. So here they are asking us that the amount not invested or invested otherwise than one of the modes, then we have to specify that the corpus donation, which I already specified earlier. In the next point, they are asking us that income accumulated or set apart in excess of 15% of the income not allowable under specific provision. Here you have to mention that. As per the ITR 7 utility, if you see that the income which is even less than 2.5 lakhs, it is automatically calculating 30% plus surcharge after allowing only that 15% the deemed accumulation option, and considering the same income, it is falling under 115 BBI. So many professional bodies has tried to put across that even I am not under 2.5 lakhs, then why I have to pay 30%, but we are awaiting the reply on the same. The next point is regarding application outside India, and there is a schedule for that and various information we have to plug in for all the applications which are outside India. Anonymous donation, which is chargeable to tax at 30%, which we already discussed over here, will also come here and it will be taxed over here. Other income. So clause 35 is basically informing all the other income which is not covered, you will be charged here. So any income chargeable under section 12.2. So 12.2 is any value of services being medical or education made allowable to a person covered under 13.3. So those person are the specified person under the act, either free or concessional rate. So I have a trustee who runs a hospital, and if she gets treated in that hospital, then it is important for us to note whether it comes under this concessional rate or free, and you have to put a yes. And if that operation for 2 lakh, then you have to mention that 2 lakh and you have to write a yes over here. The next point is income as per application 3B of section 11.1. So where a temple, mosque or gurudwara or any other place notified have been treated any sum received as corpus donations and they have subsequently violated the prescribed condition. So if you see 85, 80G section 5 has a list of violations they are mentioning, like you have to keep your books of accounts separately, you have to have your specified mode of investment recorded. So if you don't follow that, you don't get the deduction which was already, you could claim that, but you violated, so you'll be taxed on that income. And the same point is this equivalent point, the section 11.1 is a replica for 1023C as well. And income chargeable under 11.4. So we already discussed 11.4. So this point is already covered. So this is a comparison for 10B and BB, wherein if you see other income is not here and the other points are almost similar. The next point is a basic point of capital asset, wherein if there is any capital and asset transferred under subsection 11.1A, then you have to give information over here. If the capital asset being property held under the trust is wholly for charitable or religious purpose is transferred, and the net consideration for which it is transferred, you have to mention that also. So this is the information which the auditee has to help you with, that what is the net consideration. They have to also give you information whether deemed application is provided for this, and whether a capital asset being property held under a trust in part only for charitable or religious purposes transferred, then we have to mention the net consideration for that. So it is a very limited trust might have such capital transfer, but if you have to identify the net consideration of you have to give that amount here. Application of income out of different sources. So while referring 31, we identified that what application of income we are doing for during the year which we earned. And in 37, we are identifying the application which is not during the year. So it is a previous accumulated income, or it falls under corpus or borrowed fund. So similarly, how we have section 31, you have to identify 37 with electronic mode, other than electronic mode, capital revenue. First point is basically income accumulated, which you have filed the form 10. The second point is income deemed to be applied under the 9A form. The third is income of earlier previous year, which you have set apart. So if you have used that income, you have to mention that. So by chance, 40 rupees you have accumulated last year and you mentioned in 9A that I will use this year. So year in B, you have to put that 40. So that will also be included in your total income. And while using that, you have to first use your 40 and then the income you earned in during the year. You have to plug in your corpus amount and you have to fill the necessary schedules for corpus. Borrowed fund amount, if you have borrowed any fund, you have to mention that. And any other, and they are also mentioning loans and borrowing schedules. So in a similar format of loans and borrowings, you have to plug the income which you earned in that format. The next clause is how in 31 clause, we have to give information of payment exceeding 50 lakhs. Similarly, if you are using your previous income or deemed income, you have to here also identify whether the payment is exceeding 50 lakhs, and similarly, you have to fill in all the information how we filled in the earlier clause after 31. The next point is clause 39, where we earlier also saw that whether 1023C or 1310 are applicable. So basically, those are the expenses which are allowable to you if you have violated. So the same clauses are repeated here. The provision, if 215 is applicable here, you have to mention a yes or no. So it's basically the detail of the 22 clause is here in exhaustively mentioned. If I have a yes here, so I am already violating the clause, and then the expenses will be allowed to me. The condition specified, like if you have not followed 17AA, if you have violated and not filed the 10B audit report, or if you're not timely filed the report, and if any of the above is worked out, you will be having to work the computation of taxable income. It means now the application of income will be allowed with certain conditions or disallowances. So based on above, the other clauses, which are the revenue expenses, you will be allowed that, and the other things will be taxable for you. And then you will have the income for previous year. And then the next point is total expenditure income incurred in India for objects of the auditee. Whatever objects you have selected, the expenses related to that objects you have to mention here. Expenditure to be disallowed. So the expenses which are specifically mentioned while discussing the point clause 22, the same expenses they are mentioned that if you have any capital expenditure or loan or borrowing, all these expenses will not be allowed to you. Subject to that, you will be taxed. Like capital expenses are not allowed. Any other disallowances which you consider should be falling in this point, you have to consider that. And once you have a total expenditure to be disallowed, you will have actual income chargeable to tax. So this income will be linked to your clause 22, because if there you are putting no, and if amount comes over here, you have to check if there is any error or something. Clause 40. Expenditure incurred for religious purposes. So this is basically for the trust having registered under 80G5. So information, you have to put how much amount we have actually spent for the religious nature. If we have spent anything, a yes or no, and that amount. Total income. So this will identify how much, if you're non-religious trust, and still if you have a sizable amount and sizable expenses coming under this clause, it looks like you are really not following your object and you are going beyond your object. So when we compare this, so it is basically all these points are majoritarily applicable to 10B, only the application of income. That is the source of application to be further classified, and 50 lakh, only these informations are asked in 10BB and they have to file the necessary schedules, but all the other points are not applicable to 10BB. So the most important after 17AA, I would say, is 13.3. So when we say section 13.3, they have a list of persons who are being identified, and we have to report that whether there are any transactions with those people, like if it is a trustee or an office bearer. So, and most important thing to note is they have given a list who falls under specified person. So I'll first take you to the list and then we come back to this clause. So yeah. So in serial number 41, we have to select one or more of the following codes for a specified person. So all these we can have 1, 2, 3, 4, or we could select 1 or 3. So it's important to note that the author of the trust or the founder of the trust is the specified person. The second point is any person who has made a substantial contribution to the trust or institution. That is to say, any person whose total contribution up to the end of relevant previous year exceeds 50,000 rupees. So if you see that clause, it is practically impossible to have a list of substantial donors. Like if I select clause 2, I don't know, like by old trust who have donated any time in aggregate of 50,000, whether total contribution till year is to be given or for current year. So if it is relevant to the current year, I just have to go to my form 10BD, select that and just plug in all those names coming under that, and they all will be my specified person. But as the wordings are saying whose total contribution up to, so it is really difficult. So if this is to be considered in the same wordings mentioned, then it is like from the start of the trust, if any person has given you 50,000, it will come as a specified person. Also, in the first point, if you see the author of the trust or the founder of the trust, when we are mentioning, we also have to consider if the founder is not with us anymore, still we have to mention him, because in the fifth point, they are mentioning relative of author, founder, or person. So the relatives might still be alive, then we have to mention that. So first, second point, we have to make sure we have information for that. And for second point, we have to ask the auditee to prepare a list of information with the maximal possible way he could give us. And we have to rely on management. If necessary, we can give a note in the audit report, or we can just have a observation in annexure mentioning this point. The third point is where such author, founder, or person is a Hindu undivided family, a member of the family. So we have to select that code. Fourth is any trustee of the trust. So all the trustees are automatically covered in fourth number point. In fifth point, any relative of any author, founder, person, member, trustee, or manager. So all these will be covered. Sixth point is any concern in which any of the person referred above have a substantial interest. So for example, my trustee has 40% or 50% investment, or he owns a company. So I have to also mention that concern's name, and that has to be notified over here. The problem in this is the aggregate amount is very difficult to identify in this clause. So going back to the above. So now we are aware of the specified person. We have to select the code as discussed. We have to give the name. We have to select the PAN or Aadhaar. We have to give the address also. And we have to select the amount of contribution here. Then in next point, we have to give details of transactions referred in 13.2. So here we have any transactions with a specified person, like for example, any part of the income or the property of the auditee is or continues to be lent to any specified person for any period during the previous year without either adequate security or adequate interest or both. So they are giving a huge schedule over here. So by chance, if you know, there are various trusts who the trustee stays over there and they run the trust from there only. And because those trusts are like 50 years old or 60 years old, the trustees might be staying there for a nominal value of 1,000 rupees or 5,000 rupees. So it is our duty from this point to identify whether the trustee is paying proper rent for that place or. So here also we have to make sure that the trustees are aware about this clause, and they give us a presentation, or they give us a working stating that it is a reasonable rent, or reasonable amount which they are paying for the place. So it is on us as an auditor to satisfy ourselves. So next point is, if any amount is paid by way of salary, allowance, or otherwise during the previous year to any specified person. So if a trustee's relative who already falls under my specified person, and she's working in the trust as an accountant and charging some 50,000 or 1 lakh, it is our duty to identify whether that is a reasonable amount. And I have to say a yes or no. And if yes, I have to fill in all the details, that who is that person, how much is that amount given to that person, whether tax has been deducted. And by chance, if that person is getting more than 50 lakhs, they will also be covered in the earlier clause of more than 50 lakhs. So that is a highlighting point, that a specified person is getting more than 50 lakhs. Point is whether the services of the auditee are made available to any specified person during the previous year without adequate remuneration or other compensation. So other than salary, if there are any services, so which is given, like I gave an example of treatment to a trustee in a hospital, or some other service. By chance, a trustee's a nephew or a kid is studying in the school with a nominal price or with nil cost, we have to make sure that we mention that and identify that. Whether any share, security, or any property is purchased on or behalf of the auditee from any specified person during the previous year for consideration which is more than reasonable. So we have to check if there are any security or property purchased, and all these points for us to identify reasonable or no is a task. So we have to first check out what are the transactions, what transactions are falling under this clause, and we have to check the reasonability. Similarly, E and F is like more than or less than. G point is whether any income or property of the auditee is diverted during the previous year in favor of any specified person. So this is very difficult to identify, but this also we have to find out and put a yes and fill a schedule that no such income is diverted, or if it is diverted, under what clause it is diverted. So that we have to mention here. Whether any funds of the auditee are or continue to remain invested for any period during the previous year in any concern in which a specified person has a substantial interest. So earlier I said, if a trustee has, some 40% interest in a company, and there is some investments with that concern, we have to identify here, and we have to check and plug in the information in the schedule below. This is also a task for auditor to find out whether the auditee falls under specified violation. So income tax has completely reduced all their work, and they have completely given all the powers to us, that you identify what they have violated, you identify what they have, charged unreasonable. It is our duty. So they have given a list of specified violation, and the clauses mentioning here are: income of the auditee has been applied other than objects. So if it is a yes earlier clause, if we are going yes in disallowance, here we have to put a yes over here, and we have to specify the amount, how much amount to the extent is spent or applied for other than objects. Whether the auditee has income from profit or gains of business which is not incidental to the attainment of its objectives, or separate books of accounts are not maintained in respect to that incidental business. We have to identify that. So by chance of pharmacy, they have and they don't have a books of accounts, you have to put a yes, and amount of income generated from that unit, you have to identify that, which fall under the specified violation. Whether the auditee has applied any part of its income from the property held under a trust for private religious purpose, which is not ensure for the benefit of the public. So only the public religious are allowed. You cannot have any spending or application of income for private religious purposes. So you have to give information for that. The next point is if the auditee has applied any part for the benefit of any particular religion, you have to select that. Whether any activity carried out by the auditee is not genuine or is not being carried out in accordance with all or any of the conditions subject to which it was registered. So my trust has registered under 12A, and they have an option to select which clause you want to be registered. So I select education. And while applying, I use for medical or any other object, and it is not genuine and it is not for which I am registered, I have to identify and put the information here and the amount for the same. Whether the auditee has not complied with the requirement of any other law. So here they have given such a wide era that not just related to income tax, you make sure that they are following all the other law. So the auditee, how many laws they are following, we have to first identify. After that, for the time being in force, we have to check whether they have received any order, direction or degree for that, and whether there is any non-compliance, whether it's disputed or attained finality, we have to mention that. So this also we have to take it as a representation, and we have to get a list from the auditee that how many laws they are falling under, and whether they have received any degree or order or direction, and whether they have done any non-compliance. You have to fill the schedule for other non-violation. The next is, this is the schedule which I was talking about, name of the law under which non-compliance has occurred, nature of non-compliance, date of the order, whether the order has, been disputed under any court, whether it has attained, and whether the dispute has been received in the favor of the auditee. So this information we have to fill. The next point for specified violation is whether there is any claim for depreciation. So basically amount of depreciation, so they have allowed in a specific category. So either you can claim deduction while purchasing the asset or for depreciation. You can't claim both the deduction once as while taking the asset and again while depreciation every year. So you have to select one option, and which is not allowed, you have to put the information over here. The next point is regarding the trust or institute which will be entitled to claim deduction to make registrations operative. So here you have to first identify that the registration is, they may have applied for registration once only. They can't have same application again and again. They should apply only once. So this is regarding that clause. So here also, if there is any violation, you have to select. Whether the auditee has taken or accepted any loan or deposit or any specified sum exceeding the limit under 269 SS. So they have given a whole schedule of that loan and deposit. We have to identify whether the trust has accepted any loan or given any deposit. Then all the information like name of the vendor, the PAN, address, loan amount, whether the loan is deposit or was squared up during the previous year, and the maximum amount outstanding in the account at any time during the previous year. They are also asking by check or bank account or use of electronic clearing system through a bank account. So you have to take a method, and you have to also select whether it is account paying check. So all this information you have to put for a loan or deposit. The next clause is amount exceeding the limit specified under 269 ST. So basically 269 SS, ST are similar how we are doing for our companies. So in the same pattern, they have got the clause over here and we have to identify whether they have received any amount as exceeding the limit specified from a person in a given day and a single transaction is more than the amount mentioned. And also in respect of transaction relating to one event or occasion from person during the previous year. So if any payment is done to a person in a single transaction or a specific event in various parts, we also have to identify that and fill the relevant schedule for that. This is the schedule. So details of the pay, the PAN, address, loan amount, transactions. You have to also specify the mode of receipt, whether the account pay, check is given, squared up, etc. You have to identify. Repayment of loan or deposit. So here you have to check whether the auditee has repaid any amount, being loan or deposit, or specified advance exceeding any amount specified during the year. So similar is repayment, how we discussed about the borrowing. So it's a similar pattern schedule. The next is the schedule for TDS and TCS. So all the information for the auditee, we have to plug in all the information for all the tax deducted or collected and so this is a big task. We have to ask the auditee to get this prepared because all the information in this pattern we have to fill it. So this is a similar schedule for statement of TDS, TCS, same like 3CD. So it's exactly how we are filing 3CD. So now trust audits are not as simpler as they were in the earlier days. From last 2-3 years, they have really made it as difficult or equivalent to a company audit. So when we compare 10B and 10BB, so the persons refer are similar. It is in both the clauses. Specified violation is also in both the forms. The independent information which are in all the TDS and TCS. So there are some additional information in 10B we have to file regarding the deduction of 10 other than 10(1)(a) and a violation of loan repaid and violation of 269 SSTT as we discussed. So this is more or less a clause by clause information. And I would now hand over to Natwar Bhai to give the closing remarks and we can then take the question and answer. Thank you.
Thank you, Gunja. And it is really an excellent presentation. I know that you have rushed through the presentation, but the idea was to bring about the awareness because you almost dealt with 65 slides. And therefore, it was definitely a commendable job. Though you could not go through each and every clause in minutest detail. Friends, I was just going through the format. Before I come to the format, let us look at the applicability of this provision. This applies to every trust which is enjoying exemption under section 11 or section 10. So those trusts which are enjoying exemption only will have to go for this audit report. Those who are not enjoying exemption, the lucky ones, I would say lucky ones, because they have not yet registered and not obtained exemption. Because many trusts want to get out of this exemption, but unfortunately, government has not opened the window because they feel that whatever that has been collected by the trust is out of income which they have not paid the tax. So 115 TD is the provision. If you want to take an exit, then you have to pay the tax at the maximum marginal rate. So then come to the clauses that she has dealt with. They are based mainly on the Rule 17AA also. As we have seen, there are various provisions they have extracted from the tax audit also. So last clauses we have seen various details about loan, 269 SS, TT, 269 TT, then TDS provisions. They are identical provisions most of us are used to in a tax audit format. It is in the same format. But if you look at various amendments, especially I was going through the amendment relating to the corpus donation. And in case of corpus donation, friends, the condition, the amendment that is made in section 11(1)(d) is a little disturbing. What it says that whatever corpus donations that you receive has to be first invested in specified mode. Now there is no difficulty because you receive the money, it is deposited in your bank account. That is one of the specified modes. But it says that it has to be deposited in the specified mode specifically created for such purpose donations. So that is where the difficulty arises, that the normal bank account where you deposit the amount is not specifically only for the corpus donations. And therefore, before you utilize any amount which is received as a corpus donation, first you have to park into an account, either it is a fixed deposit or you open a dedicated savings account meant for corpus. And thereafter only you should spend. Otherwise, you will be violating the condition and you may be covered by 115 BBI, that is the section where you will be hit and the corpus donations will lose the exemption. And in the event you lose the exemption, you will have to pay the tax at the rate of 30% and applicable surcharge and cess. So at the very first instance, it could lose the exemption. I was going through the clauses, and if you look at the clauses, there are almost 10 clauses relating to the classification of the income. Normally, the department should be worried about the application of the income. If you look at those clauses, which run from clause number 21 to clause number 30, so they are dealing with the classification of income. And as if that was not enough, there are various other clauses which are also having sub clauses. So there are around 30, 40, 20, 25 classifications for the different kind of income. So department wants to capture what is the nature of the income. So one will have to be very much careful about classification of the income. So we will have to devote a lot of time in bifurcating the income. What is the category? Because there are some income which could be taxable, which may not be entitled to the exemption. Similar is the list of applications. So application has been also bifurcated under various categories. So one will have to be very much extremely careful. So these are the major clauses which are derived from Rule 17AA. Friends, when you look at Rule 17AA about maintenance of the books of accounts, it is not merely the various normal standard books of accounts which we maintain in the tally. But if you start from the clause D of 17AA1D, there's a host of a very lengthy list of requirements which one will have to maintain, and therefore it is our role to educate the trustees that this is the list of requirements. You have to maintain those records, and those records, of course, as Gunja mentioned, now they are required to maintain for a period of 10 years, starting from. So the various list of requirements may be prospective, but definitely they will have to maintain the records for a period of 10 years. Then comes the issue of, she mentioned about the business income. So the auditors will have to examine the activities of the trust in greater detail to see whether the activity results into a business activity or it is a per se object of the trust. Now take example of a hospital. So long as they render medical services, they collect the fees, they sell the medicines, they charge the patients for whatever medicines that is used. Now that is in the course of this medical relief. So that is a per se object. So when hospital is doing that much, it is not to be considered as a business activity. However, when there is a pharmacy, which apart from catering to the hospital, it also sells the medicines to outsiders. In that event, the pharmacy activities of the pharmacy will become a business activity. And in that event, a separate set of books of accounts are required. And not only the separate sets of books of accounts are required, but now they introduce tax audit provisions. So apart from 10B reporting, you will have to also do the tax audit. So that is, so there are triple whammy. You can say that the Rule 17AA, we have not seen this kind of a list of books of accounts, even for the corporate entities. It's quite exhaustive. probably one will have to deal with very seriously with the requirements and educate the trust. Because if any of these thing is not maintained, probably you can land up into, and that is the responsibility of the not only the trustees, but the auditor also will have to mention that the required set of books of accounts are maintained. Now, there are business also, there are two classifications. One is business held under the trust, and there is an incidental business. So what is business held under the trust? Now, when the trust itself is created for certain activity. Now, let's take the example of our Lohana Mahaparishad. They have certain properties, say Wadis, which some of the trusts, Lohana trusts, are created specifically for providing this whole, the Wadi, what we famously know as Wadi, to needy people. So that needs to be examined, whether the Wadi that these trusts are owning, whether it falls into any of the specified objects like we have discussed, relief of poor, education, medical relief. So if the Wadi is generating certain income, whether it is relief of poverty, that can we say directly it is relief of poverty. Now we are charging commercial rates for the Wadi. We might be having some arrangements with the caterer. We are getting a cut out of the caterers. We have a monopoly decorators also. And if the rate charged to, that is fine, we are getting some receipts. But the rate charge is also almost the commercial rate. Then it would be very difficult to justify that activities of whatever body or whatever community hall we call is for the purpose of relief of poor. Then we'll have to independently examine then under which category we fall into. So suppose whatever income that is collected, it is given by way of say medical relief, or it is given by way of food grains to the needy people, then probably we can justify the activities as a relief of poverty, or for say medical relief, or for education. And the activities, if we charge substantial fees from the outsiders, the activities could take a color of a business activity. So one will have to be careful that the activities of body could also construe to be a business activity. It could be a business held under a trust, because the very specific purpose of creating the trust is to run the body, and whatever other activities they are doing, probably it is out of the income that we generate. So that has to be kept in mind. Another thing, difficulty is about the list of relatives. So there is a section 13. So there are various compliances. And the real danger is that even the donor who has donated during his lifetime a sum exceeding 50,000 rupees to any organization, he also falls in the list of the specified person. Now, how to gather that information? That is another challenge. While trust will have the records for current year, or maybe last year also there was a Form 10 BD, but we'll have to make a very concerted efforts to gather the information, because there is no specific exemption, and therefore one will have to make the efforts. As far as auditors are concerned, the life is made relatively easy, because there is an old circular number 143 dated 20th August 1974, which says that as far as the information in Form 10B is concerned, auditors can rely on the list of relatives provided by the trustees. So when you obtain a list of relatives from the trustees, then you know you have to have 6 categories, as Gunja dealt with the slide. So relatives also are classified into 6 categories. It is advisable to get a list of relatives also classified into those 6 categories, so that when you have to select a particular code, it becomes easy, because once the trustees give a list of relatives, you don't know which category it might fall in. So it is advisable to obtain that list. But having obtained the list, we should also obtain a list of the transactions, because finally we need to comment on the transactions. So obtain details of the transactions with the trustees. And of course, that does not mean that you need not independently also examine. So while you can examine the list of the transactions that may be provided, and you will have to also apply your standard auditing practices to find out whether anything is missed out, it is auditor's responsibility. And you need to also examine whether the consideration paid to the trustees is adequate, or it is not at arm's length. It is very, so it is the auditor's responsibility to find out. So therefore, you may need some supporting. Let's take an example. That hospital as a medical director himself is a trustee, and the fees he is charging to the hospital could be comparable with the fees which are paid to other doctors. So many hospitals have a rule where they share the fees. So suppose 100 rupees collected, they pay say 80 rupees or 90 rupees to the doctors. So if something is more paid to a trustee who is a doctor, it would be very difficult to justify. Similarly, the treatment, as Gunja mentioned, accorded to some persons who are connected with those institutions. In that event, the question is whether it is an undue benefit. So one will have to look at whether any undue benefit is passed on to that person. Friends, this becomes all the more difficult when you see those Jain temples or some, let's take example, we are connected with Brahma Kumari's institution. So most of the dedicated people and the people who administer, they stay there, they have their house, they have, the vehicles are provided, they have food there also, and amenities are provided. So whether that can be considered as any benefit passed on to those trustees, or whether it could be considered to be an unreasonable or more than that is a question one will have to examine, and one will have to report accordingly. Similarly, when any property is occupied by the trustee, so whether he has paid arm's length considerations, so on that part also one will have to examine that that is being done in a proper manner. Now, yeah, so I think this is all I wanted to say, that there is an onerous responsibility on the auditors also, and there is more onerous responsibility in the form of maintenance of the books of accounts, because as one goes through, the Kathy, I would recommend that you will have a detailed session on Rule 17AA itself, because that itself is a very vast list of the requirements, and one will have to understand what are those requirements. Not necessary that you maintain separate set of documents if those details are available within the books of accounts itself. So one will have to really educate their clients. And therefore, many times I say that when we do some audit or some services to the charitable trust, if we do not have proper knowledge, we may be doing it free of cost, but whether we are doing really a good service to those organizations. So it's time that these institutions need thorough professional support. They have to have a very, I mean, the accounts and everything has to be also managed in a professional manner. Otherwise, they are going to, they are heading for a very tough time ahead. With this, I think, because the time is also getting over, so I will ask Gunja to take up the questions and answers session.
Thank you, Gunja and Natubai. It was an excellent session. And for a moment, I felt I've gone to the 3CB, 3CD section. I think they are bringing both the forms on par. There were a few questions during the lecture in the chat. I will just quickly take up them one by one. First question is, what are the consequences if corpus donation is not invested as per section 11.5 modes?
So basically, you will fall under, specified violation, because it is, important to know that if you have a corpus, it is ideal to tag it with the separate investments mentioned under level 5. So it is, we have to file it, otherwise it will be disallowed also. So we have to have level 5 investments.
Okay, second question is, if a trust receives donation on 25th March or after, and trust is not able to apply such contribution as it is received on the last moment, is this considered deem application for current year and respectively next year reduced from application? So I think they are trying to ask, if it is received on the last day, we still have to file that form with AO for non-application.
Yeah, so basically, they have to file the Form 9A because, they will be using in the next year. So it's better to file the Form 9A and commit for what reason they are going to. So they can mention as they have received there are option to mention the specific reasons why you are not using that funds. So you have to select that specific question and you have to tag it there. Okay, because I have received during the last day or whatever, and that's why I'm going for deemed application. So you have a option there in the Form 9.
Also, this queries from my side. If the amount received in the last week is coming to less than that 15%, then I can take that advantage and not apply the form, right? If I've
Yes,
already
yes,
applied
that
the
will
majority.
automatically go as a deemed application, so you don't have to.
Third question is, can a loan advanced by one charitable trust out of the donations received during this year to another charitable trust be treated as application of income? Both the trusts have similar objects.
So basically, first we have to see whether the charitable trust has taken an approval from the public trust, that you have to take an approval from the commissioner that you want to take such loan. If you have received the approval, then you can take that loan and you will get an deduction when you repay that. So with regards to, sir, you want to add something on this?
The question is on application when the loan is given, whether loan can be given to another trust. That is the question. So the other trust should have obtained the approval.
Right.
Now you can give a loan that can also be. We have seen many trusts giving scholarship loans to students, where the student is expected to return. So even the loan that is given could be treated as an application of income, because you've given to that student, and if it comes back at that point in time, it can be offered as an income. So it may sit in the balance sheet, but when you file your this return of income, it can be taken as an application of income.
Here, one extended question to this question, Gunja and Natubai. Permission has to taken by both the party, or one party who is taking the loans has to take the permission, or the person who is giving loan, both have to take the permission?
Gunja, you would handle this question?
Sir, you can take that.
Yeah. So see, if your objects permits, the receiver has to take the permission. If you want to borrow, the receiver needs to take a permission. As far as the giver is concerned, if it fits into the objects, like we have seen many institutions like our Lohana Mahaparishad also, they might be extending the loans to students. So if it fits into the objects to provide the scholarship loans to the students, that is perfectly all right. But the receiver, because it's borrowing, is creating a liability. And if it is a charitable institution, will need a prior approval from the charity commissioner.
Here one more Radubai, sorry, question and question. Receiver can take the loans or interest free?
Yeah. See, the educational institutions, educational scholarship loans are given interest free, and when the charitable trust is receiving interest free loan, you see, the trustees are required to protect the interests of the trust. And when the money is coming interest free, there is absolutely no bar in taking. Probably you're giving to another commercial enterprise, then there is a difficulty. Similarly, in the course of business, if the trust is undertaking a business and you are giving some advances for construction work or for any other things, so there is absolutely no bar, because you are undertaking a kind of an activity. But as coming back to your question, yes, there is absolutely, because there is no harm to the institution if they take a interest-free loan.
So just to add, in the Bombay Public Trust Act, they are specifically mentioning under section 36A only about the trust who is, receiving the loan. So they just have mentioned to take prior approval about the trust who is receiving. So there is no information about the trust giving. So that's the only point I wanted to share.
So we can take advantage of not mention about the giver of the loan.
Gunja will neither agree nor disagree.
Maybe.
Thank you, Gunja. Thank you.
Next question is, Form 10BD has to be filed by charitable trust registered under Section 12A, or it has to be filed by trust registered only under Section 80G?
No, so if they if they are under 12A, and so it's basically for 12A they have mentioned, and for 1023C. So if they have a application registered under income tax only, then they have to file this tax audit report of income tax. So just ATG is not giving them the exemption option under the tax. So it is essential to be registered under 1023C or 12A.
If Provident Fund, Profession Tax or TDS for the month of March is paid in the next year, can the same be claimed as application? Any forms to be filed for claiming this as application?
So if you recollect during the presentation, I had just mentioned that whatever is now credited or not actually paid will not be allowed in this year, but it will be allowed in the next year. So you just have to plug in the information of the amounts which you are going to take as deduction in the next year, and you will get it the benefit in the next year.
So it's not similar to 43B where we do it before the return filing in VAT and deduction, or it will be straight December?
I'm not sure. There are no such guidance on that, and we are awaiting a good guidance note from
So it will not be
ICAI.
an application for 20 to 23, but it will be an application
No,
for
it
20.
will be allowed in the year of
So it will
application
be
only, so not like 43B.
Okay. Okay. If sorry, next question. A trust should not have more than 20% of business income of total receipts. Is this applicable to a fully religious trust?
See, there is a lot of confusion going on. This particular requirement applies only to GPU charity. So if you look at 215, there are various objects given. As I mentioned, the last object is any other object of general public utility. So if you don't fall into a religious trust or educational or medical relief or yoga, that event. If you look at the question is if you look at religious is not specifically mentioned. If you look at the education, medical relief, religious is not specifically mentioned. So the issue arises whether you fall into a GPU charity. There is a good chance that you may fall into the GPU charity, but you will have to look at the application of your income. You see where you are applying your income. Are you applying your income towards medical relief? You are applying your so the whatever temple income that the temple is earning, where they are applying that income, that is very important. If any part of the income is applied for the purpose of religious activity, probably there is a danger that you could fall into a GPU charity. Then that even for that religious trust, if the receipts from the business is in excess of 20% of the total receipts, so there could be a disallowance of that income.
Okay, it is actually a follow-on question to the previous one. If the TDS for March is paid in April, the previous question which we were discussing, then only the TDS portion is disallowed or their entire expense?
No. So TDS portion is a statutory, that is something that is allowed. So that is standing as a creditor. Now the difficulty, as Gunja mentioned, is that any expenses which is not paid will be allowed in the year of the payment. So we have not examined this particular question. Is that TDS is standing as a liability in your books of account? That is something not paid. So whether there is a so I would say that since there is specific provision, the specific will override general. Or right. So generally we take the stand. Yeah. The specific provision is there which allows you to make the payment in the subsequent year. So we should take benefit of those specific provisions, and that should override the general provision, that otherwise the whatever the credit balance is there that for TDS, if it is paid in time, then it should override the general provision.
So it was advisable to pay that before 31st March or on 31st March only. So this question doesn't arise. So we have to try to talk to our auditees so that they are prepared in advance, and whatever expenses they want to claim, they should do it before 31st March to avoid such confusion.
For want of time, I'll just take last two questions. Can a trust take registration in 12AA and 80G both? If yes, please explain the difference.
Yes, so they can. So 12A is basically the application for income tax deduction, and 80G is for the person who is giving donation to that trust. So it is the benefit for the people who will give donation to the trust. So this is how it is separate. So ATG is an optional thing, and the trust do not need to have ATG because they are already under the exemption. So if they want, they can be registered.
Right. And the last question is, what is the deadline for filing of these 10B and 10BB? 30 September, like Form 3CB, 3CD?
Yes, so this is the 30th September. So if you recollect, I had shared that circular. So it's ideal you all should, refer that circular 6, which came, which is mentioning that the due dates are for the form 9 and 10. 9A and 10 is 2 months before the filing of return, and for the audit is 1 month before the filing of return. So dates they have not mentioned, but just we have got this kind of an allowance that if you file till this date, it is not disallowed. So it's better to read that circular and interpret accordingly.
One last point I would like to make is that many trusts might have missed renewal, the old 12A registration or ATG, and if they don't register, probably they might face the rigor of 115 TD. So luckily there is a circular number 22 of 2022, which is the date has been extended up to 30th September 2023. So till the end of this month. So it is advisable those who have missed the deadline, there is still a time till the end of this month. So they can take advantage of this window and make an application so that they don't face the rigors of 115 TD. Thank you.
Right. Thank you for answering all the questions of the audience. I now request CA Reema Shah to give vote of thanks to Gunja and Natubai.
Thank you, Rupal. Good evening, everyone. On behalf of everyone, I extend my heartfelt gratitude to CA Gunja Thakrar and our chairman, CA Natwalal Thakrar, for giving us an excellent presentation on the topic. As Natwalal uncle told, that lucky are those who have not received 12A registration. It seems so because when we started filing 13 years ago, when I started filing the audit report, it was only a 2-page report. And now it has gone to 49 clauses. It is more than the number of clauses in Form 3CD. So as you can see, the extent of reporting that is required. And till today, the schema is not yet notified. So I think many of us have not even taken and not even done any exercise for checking out the various clauses of the audit report. And Gunja here has very lucidly spoon-fed us each and every clause of the trust audit report. Each and every clause, especially the application of income and the expenditure application of it, how to report it, have been explained in a very lucid manner in a detailed format. Further, many other concepts and provisions of the act has also been taken care of, like books of account reporting. Like वो तो काफी सालों पहले भूल गए थे कौन से books of accounts कितना reporting कब हो रहा है, बस करना ही every year we used to do it and do it, but that has been refreshed to us today. And furthermore, more importantly, what is called as an application and what is your income, especially the 20% part and the application, how do we bifurcate and reflect, that has been explained very lucidly and very perfectly. I'm very thankful to CA Gunja Thakrar and Natwala Thakkar for giving this insight knowledge. Further, I would like to thank LMP President Mr. Satish Vitlani, LMP CE and Tax Professional Chairman Dr. Bharat Vasani, MCTC President CA Khyati Vasani for arranging this very apt topic for discussion, especially during the audit season coming in September. I would also like to thank you, Rupal Shah, for conducting this this event, and Vaibhav Bhai from LNP for our backend IT support. And last but not the least, I would like to thank 120 participants for making this a huge success. On behalf of MCTC, I would like to make an announcement that we have already shared the link of the form for membership. Please take advantage at the fees at the right currently is 2,500, which will be to 5,000 in October. Thank you very much.
I requested Gunja to share the PPT, please.
Yes, I would do that. Thank you, everyone. Thank you.
Thank you.
Everybody,
Thank you.
thank you.
Yeah, thank
Bye.
you,
Thank you,
Natwala.
Khyati.
Thank you, Natu bhai, बहुत मजा आई.
For excellent, हाँ बहुत मजा आई. Khyati is doing wonderful. અને આપણે સતીશભાઈ એકદમ ડાયનેમિક છે, ઇઝ ટેકિંગ